recording up. Okay, we are recording. We're good to go. Let me just double check. I just want to make sure. Yep, good. And it's all recording well. Okay, thank you, everyone. Welcome to you all to this event that I did actually at the London Banking Hall, was where I did this presentation. And we're talking in pre-COVID, so quite a few years ago. But I think it's so relevant now, I decided to redo the event and upload it to the YouTube channel. Now it's entitled. Now we worked, and we still recommend a company called Active Trades, which are a company here in the UK. But this interesting title sort of struck a chord with me. It's the lost art of professional chart reading revealed using volume and price. Now, volume and price. Well, I teach something called volume spread analysis. And we're working very closely, and I'm delighted to announce we're going to be doing an event in London. We've moved the venue because we've now are working with a company called Trade Nation, and we're going to be in very close proximity to Liverpool Street train station in their offices. And we've moved the dates just a few days from the previous announcement. You'll get an email for those of you that are coming. I know if you've already booked tickets, don't worry. Tua and I will be in London anyway, so we'll meet with you. There's no problem there. But we are going to do the event at the Trade Nation offices, and that is their offices are in Bonhill Street in EC2, London, in Greater London, and that's a really nice venue to be at for many reasons. So we're going to do that event. It's a 2-day event. We are still going to broadcast it on the internet when we're not going to stop doing that. But this just makes it much more interesting because we're going to be using their trading platform on the first day of the event, and you'll be able to see it. So what I want to do is go back in time a little bit here, and I'm going to talk about an introduction to the Richard Wyckoff trading and investing method and volume spread analysis. My name's Gavin Holmes, and I'm the author of 3 books now, but my first book was called Trading in the Shadow of the Smart Money. But I didn't start my career as a financial expert. I actually started like that. Yeah, a Hampshire policeman. Yeah, that's me. And my hair has changed a little bit from the mullet that I had then. But I was a serving police officer in the Hampshire Constabulary and also with the Metropolitan Police in Croydon. But that doesn't make you an expert in trading, but it does make you an expert in one thing, risk management. And I'm pretty good at that. I know, I understand it. Because when you're out on the beat, as I was, you have to look after yourself. You have to understand the risks that you're undertaking. And we're going to talk a bit about that today. And so these are my books. I've got 2 that I wrote about trading. My third book, which is now the bestseller of all of them, is called Think, Link, Create. And it's very much about your belief systems. But Trading in the Shadow of the Smart Money, which is the first book that I wrote, was very much influenced by the late Tom Williams, who passed away in 2016. And it helped me enormously to figure out what I'd learned. And, you don't realize it. I spent, thousands of hours with this man who was a genius, in my opinion. And I think many people who've read his work would understand that. And he talked about the markets being manipulated, which I didn't really understand at the time. And he talked about price and volume and the spread of a bar, which I'm going to show you. And then I looked at some of the things that I did, and I've become very wealthy based on a lot of the stuff I've learned. And that's why I do these events. So when I wrote this book, Trading in, why did I even do it? Well, I'm not an author, but, well, I clearly am now. But the reason I did it was Tom Williams sat me down and he said, Gav, that's what he used to call me, you need a calling card. I said, well, what? I've got business cards. I've printed them, the business cards. No, he said, you need to show that you've got knowledge and that you're sharing the knowledge. And if you do that, what will happen is you will understand why. Oh, hold on a second. Just give me a minute. Glenn, I'm just wishing you the best. I'm in the middle of a seminar, but I'm sending out some really good words to you now. Okay, I'll call you back. I hope you're all right, mate. I'll call you back. By the way, that just so you know, that's Glenn Rosario, who's a very nice friend of mine, and he's a really nice guy. And he had an accident like I've done. I've broken my fingers, and he's really, really nice. And he's apparently he's recovering well. So that's great news. So it's all good. So let me get to the point here. What is trading in the shadow of the smart money? Well, it means you're following the footprints of the big players. Okay, that's pretty much what we're doing. And the smart money move markets. Now, you might ask me, who are the smart money? Now, I could do a list, which I know. I could do a list. But what's the point? Because Tom Williams, when he was teaching me, said, we shouldn't care about who the big players are. We should care about how we can read the chart. And that's what today is all about. And so I've done seminars all over the world. Okay. And when I was looking back at this, and I was reviewing a couple of the YouTube videos, this was the late Tom Williams with me in Poland, actually, at the time, which Poland is at the moment is in the news. We talk about charts, of course we do, and this is what we're going to talk about today. And I'm not going to go to live charts or anything like that. I'm going to just show you some basic principles. And this is a presentation that I did at the London Banking Hall prior to COVID. And the reason I think it's relevant, as you're about to see, is what's going on in the world right now, especially in Poland, is relevant to what's happening in the financial markets. So who are the smart money? Well, I'm not going to get into all this because ultimately I can change this slide. I've not changed it, by the way, but it doesn't matter. The bottom line is we're interested in understanding the footprints of the smart money. And it doesn't matter whether you're Warren Buffett or whether you're Gordon Gekko or whoever you are. Don't worry about it. What we want to do is trading in the shadow of the smart money. So learn to trade in harmony with smart money. When we mean in harmony, it means if they're going short, okay, at a certain point, you've got to be aware of why they're doing it, because it could reverse on you real quick. And it's happened. British pound, great example. Euro, great example. Gold, great example of stuff I've put on YouTube. If you want to go and study it, go to youtube.com/trade guider and click on the videos tab because it's there. It's all there. It was all in real time. But better than that, the event that we're going to be doing will be live trading with Trade Nation. And that's going to be a Friday and a Saturday, and it's going to be in London. And if you can come, please do meet us. We are real. That's Turu Nagapan, who's the managing director of Master the Markets, and myself, Gavin Holmes. And we're going to have students that are coming from various schools that are going to come and learn to trade. This is going to be a great thing. And we are broadcasting it on the internet. We've decided we're going to get a film crew in and broadcast it. And I think that's a great thing, because I realise a lot of people are in Canada, America, different parts of the world. So, trading in the shadow of the smart money, the trading method smart money don't want you to know about. This is not me writing this. This was written in 2013. I've used it in my book, Trading in the Shadow. It says, presenting the secret trading strategy from the 1930s that the hedge funders don't want you to know about. So what does that mean? Well, it all comes back to a man back in the 1920s, actually, who became very famous for, he wrote The Magazine of Wall Street, 250,000 subscribers without any internet, without any connections or anything like that. And his name was Richard DeMille Wyckoff, Richard D. Wyckoff, Wyckoff. Very popular right now. A lot of people interested in it. And it says here, in his book from 1931, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market and science and technique. It's out of print and somewhat difficult to find these days, but it's not impossible because I've got them. But even in 2013, when this article was written, hedge fund managers still swear by it. And that's what we're going to touch on today, because that's exactly what we're going to teach in our course, the Wyckoff method. And I'm going to show you some things that will, I'm sure, enlighten you. But most importantly, this whole method has been around for many, many years. And I brought the company from Tom, well, it would be 37 years now when he started it, but I bought it when it was probably 20 years old. And we renamed it from Genie Software to Trade Guider. And why Trade Guider? Where did I came up with that name, by the way, and I registered that website because I thought about this. I said, and I said to Tom, what are we doing? Are we giving buy and sell signals? Are we telling everyone if you buy our software, you're going to be a millionaire next week? And he looked at me and said, well, of course we're not. I said, well, what are we doing? He said, we're guiding. And that is exactly it. Trade Guider. And he said, I'm giving you the website, Trade to Win. And they're both our websites, but they both do slightly different things. One is what I call simple, meaning most people who don't want to learn to trade, they don't want to learn it, they just want to try and make some money. I would say you're dealing in a profession here. Okay, this is not a gamble. And I've done a lot of seminars in the years that I've been doing this. You have to put some effort in. Effort versus result. It's one of the universal laws that I talk about in Think, Link, Create, my third book. So you have to put a bit of effort in. But if you do, you get the rewards. Now, they're not instant sometimes. Sometimes it takes time. Sometimes you're going to have to put some money in and take some risk. But here's what I'm going to show you today. Okay, I'm going to show you why volume spread analysis works if you study it. And If you go on to Amazon.com and put in Gavin D. Holmes, you'll see what I've done. Now, I'm 58. I'm not a spring chicken, but I have managed to write books and help people. So I'm going to show you that now. So the first thing we've got to understand is the game on Wall Street. What is that? Forget Wall Street for a minute. It's all over the world. It doesn't matter if you're in Singapore, Hong Kong, and by the way, my blessings go out to everyone in Hong Kong and China who've got a massive typhoon heading their way. And I wish them very well. I wish them, blessings, because that is actually happening. What are you talking about? Yeah, I wish them well. It is definitely 240-kilometer winds going through Hong Kong and China. So if you're listening in on YouTube from those regions, my best wishes. I hope everything will be fine. The second thing is, when we talk about Wall Street, that seems to be the place where everyone points their fingers at and said, oh, well, it's Wall Street. Okay. And then I look at Nvidia, which is one of the stocks that I've been featuring on the YouTube channel, which has had a massive rally. Now, why? And a lot of people will say, oh, it's artificial intelligence, it's AI. But there's other charts that prove to me that this could be a bubble. And you've got to be real careful. But there's a few charts that I'm going to show you. I'm going to show you the principles, actually. I'm not going to get into the live charts. Everyone wants to do that because you can go to YouTube, youtube.com/trade guider, where this is being produced, and you can go and view it. And you can view the videos. So let me get to the point. Where there's money to be made, there are professionals, specialists, a bit like being a policeman. You have specialists in police, like you do in any service. You can be a detective, you can be a police constable, you can, patrol the beat in a car, or you can be undercover. But you're a specialist. And then you get to the next level where you become an armed police officer, or you become a specialist in a certain arena where you're trained. No difference here. So here I've talked about lawyers, criminal lawyers, domestic lawyers, divorce lawyers, any of them, doctors, brain surgeons. You can go up, surgeons, GP, general practitioner, banking, okay, commercial banking, retail banking. So we must understand this. So the financial markets that we deal with have specialists, and they know exactly how the herd, as Tom called them, or the group, will think and act based on news. And mostly it is news. It's social media. It's conjecture, which I don't like. As a former policeman, I don't like conjecture, which is where you think, oh, well, I think this, I think that, I think that. You've got to be very careful with that, because in the markets, it will fool you. Markets are driven by professional money. It's always been and it will never change. In his 1931 book, he talks about this. He explains something called the composite operator. And, one of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals, or I call them the smart money, and understand what they're up to or what they're doing. That's what those who follow Wyckoff do. They watch the large operators, the big players. Now, again, I've got a list, but it doesn't really matter. Okay, it could be big banks, it could be institutional money, it could be what Tom Williams was, a syndicate trader. This is how the markets are driven. Now, I've got a picture of a cat here. Buy low, sell high. Sleep 16 hours a day. Well, I sleep about 17 hours a day. But the bottom line is, that's not such a stupid image. And I think my publisher called it a meme. I don't know what they call it. But we took it out the book because my eldest son, who's 27, he said, well, no, you can't really say that. Can you? Buy low, sell high? I said, well, isn't that how the markets work? Which I can prove. And they persuaded me to remove that particular image from the book against my will. Having said it, doesn't matter. Because this is how it works. Many retail traders and investors think, even though they don't think they do, when the news is bad and prices falling rapidly, they panic and sell, fearing further losses. And this is what happens. So they sell right at the bottom. That's what you would do. You see the price going down, you're going, oh, I'm not going to hold on. But if I show you the indicators that we've got, and we've got scanners that prove it, and they show when the buyers are stepping in, it's exactly how it works. Has to. So you've got to look for the footprint. If an elephant walked across your grass, now I'm making an assumption here. You might all have a garden. Some of you won't have. You might be living in a apartment block. But if you did have a garden and an elephant walked across it, it would leave a footprint. Okay? There's no two ways about it. I've got a lovely garden. And if an elephant, which I'm assuming where I live, if an elephant came across my garden, it had to have escaped from the zoo because we don't have wild elephants in sandbanks. It doesn't happen. But the point is, it's left a footprint, as you can see here. Now, I'm going to show you on the chart how you can read that footprint. So now we get to what's going to lead us into our course that we're doing in October in London, in Liverpool Street. And I'm looking forward to meeting those of you that are already coming in. We've now got sponsorship from Trade Nation, and I'll be talking more about that on an email later today. But what is this? This volume spread analysis and the Wyckoff method. Now, I'm not going to get into the smart money indicator technology just yet, because we're going to do a lot of advanced stuff in the event. And it's going to be much more advanced than you've ever seen. Now, it works because clearly, and I'll say this as you'll see, that volume is the key. And then you put in the VSA method with the smart money indicator, you put them together and you'll see what happens. And Turu and I are going to cover this on Thursday, but we'll do more detail on it. So who invented all this? Where did it come from? Was it Gavin Holmes? Was it? No. It was Richard Wyckoff on the right. It was Tom Williams. And these guys are pioneers of
new visitor.
I know we're getting a lot of leads coming in right now, but that's fine. They are pioneers, and actually quite rightly so. And Wyckoff, back in the 1920s and 30s, wrote some books, which I've got. And he was the publisher of the magazine of Wall Street, which talked all about the same thing that I'm talking about. So I don't know, nothing's really changed. However, what has changed is the way we can read the charts. In the days of Wyckoff, it was all done on paper, and the same with Tom. It was all done on paper. But it's all changed. We can now look at cryptocurrency. We can now look at the 6B, the 6E. We can look at all of these futures contracts. We can look at actually pretty much anything. So we are in 2025, going into 2026, very blessed with the fact that we can pretty much look at anything. Now, other great questions I've been asked. Does this work for Malaysian markets? Yes. Does it work in the Indian market? Yes. Does it work in the Chinese market? Yes. Yes. The answer will always be yes, because we're working with TradingView right now and we're using their platform. And that's what we've plugged into. So who was Wyckoff? Well, he passed away in 1934. And he was the founder in 2000. I think it was 1907. I believe. Yeah, it is 1907. And he was the editor of what he called Stock Market Technique. And he said in 1914, thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transactions second by second, and therefore those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. Think about that. And then there's Tom Williams, Tom George Williams, born 1929, January the 4th, passed November the 7th in 2016, and I was with him. And he, I don't want to get too emotional here, but his final words to me as he took my hand, and I literally, there were the final words, he said, "I think my work is in good hands, Gav. Look after it." And that's exactly what I'm doing. And he was a former professional syndicate trader, and which is in effect a fund based out of Beverly Hills, California. And he said, before he passed, when I developed the volume spread analysis, which he did in 1985, but I think he actually got the Wyckoff method well before then. I wanted to prove the Wyckoff method could be computerized and used by any trader or investor to recognize the imbalance of supply and demand that will cause price direction to change. Volume is vital in your analysis, which is why the self-regulated exchanges do not want to release the true volume figures until the very next day. And I checked that, and it's true. So what is it? Well, you can look at this. Most traders are aware of the two widely known approaches used to analyze a market: fundamental and analysis and technical analysis. Many different methods can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why something is about to happen in the market, and technical analysis attempts to answer the question of when something will happen. However, volume spread analysis, he says, however, that's Tom, is a third approach to analyzing a market. It combines the best of both the fundamental and technical analysis into a singular approach that answers both questions of why and when simultaneously. At its core, VSA, as I will call it here, or volume spread analysis, if you want to call it that, is a methodology based on the original works and teaching of Richard D. Wyckoff, a trader from the early 1900s. The methodology seeks to establish the cause. That's really important, that. The cause of price movement on a chart. The cause is simply the imbalance of supply and demand as the market trades. It results in two things, isn't it? Strength or weakness in the market being charted. But, and here is the but, for the correct analysis of volume, you need to understand that recorded volume contains only half the knowledge required for a correct analysis. The other half of the knowledge is found when observing the spread, or range, as it's called in the US, of the price bar and the closing price on that bar. Volume indicates the amount of activity, that's the word, on the price bar. And the spread or range of the bar shows what the price actually did, and most importantly, where the price finally closed. So when we look at it, volume is always at the bottom of the screen, unless you change it on your charting platform. But you've got very high volume, or we call it ultra high, or you've got very low volume, and it's all relevant. We look at the spread. Okay, the spread is basically on the volume. What did it do? High, low, and then you've got the close. And then it doesn't instantly happen. You've got to, this is why we produced in TradingView a scanner that picks up when this type of activity starts to appear. And it's been the most successful platform that we've got for lots of reasons, but I won't go into it now. This is not a sales pitch. This is just showing you. Now, when we go forward, we must understand, how can volume spread analysis identify the moves of the big money? Well, volume is activity. That's it. There's no other description. I can't give another word for it. Volume is activity. And it's the activity of human beings or computers. I don't know if AI is having a big effect, but it's definitely there, and I can see it. And if you go to the YouTube channel /TradeGuider, YouTube.com, go and look at what happened. Now, there's something I have learned as a trader and an investor. There's no such thing as being right or wrong. Okay, it's irrelevant. There is something you've got to have, is risk management. So you take a trade and you say, do you know something? I'm going to put my risk there. And then if you're wrong and you get stopped out, sometimes you don't. Sometimes it can slip, very rarely. Then you would admit that. So we must understand, as traders and investors, which is what we teach and what we're going to do in London. And I'm really looking forward to meeting those of you. I already see people signed up today. We'll you know, we're not AI. Well, not yet. We might be. But volume is activity. We, and I'm talking about everyone listening, and there's a lot, because it tells us the consensus of opinion amongst the big money, the smart money, as I call them. The spread and the close in relation to the background confirm what they're trying to do. But beware. Now, this is a very old PowerPoint that I'm using, and I'm doing it deliberately and putting back on YouTube because it's so relevant, right? Are you being laid into a trap? And I think many of you could be. Okay, now this is one of the, you can see here, do you want the bad news or the bad news? Now, I wasn't allowed to use that in my book either. That's a grumpy cat. But then you've got, oh, this, I was allowed to use that. Oh, this is great news. It's going up. Everything's going up. British Petroleum was going up. And all of these things, and you can see all of these. I mean, I think they call them, I think it's memes or something, or memes. I don't really know. I'm not a big expert in that area. But, yeah, what are they called? Oh, okay, my wife has told me memes. Okay, fine. It doesn't matter. You get news. And then you get the news, and, I mean, we're going back now. This is historical. The news is bad. World stock markets in turmoil. At the moment, it's the complete opposite. Everything's going up. And then you get all of these things. And I look back at this and I went, that was years ago. But it's so relevant because these things happen all the time. So you've got the fiscal cliff, you've got downgraded government, you've got the credit crisis, but all of the things in Trade Guide are saying buy. The markets, look at it, what it's doing now. But we've got alerts that tell us this. So smart money, look at this one. I mean, obviously, we've talked about, the different types of things that cause markets to move. This one happens to be Ebola. Right now, what that's got to do with Apple stock, I've no idea. But Ebola is a fear factor for the stock market. Okay, fear has returned to Wall Street. Right? Okay, it's fear. Oh my goodness, that's it. That's human nature, fear. And you look at it and you say, well, hold on, it can be pinned on Ebola. Well, Ebola's in Africa. It's not in Wall Street. But that's exactly what people think. And then you get the buyers coming in. That's what happens. It's a weekly chart. And that was the old version of the software, by the way. We've got much more developed software than that. But it was a shakeout. It was completely misleading. Now, if you understand that, you start to figure it out. You say, hold on a second. Fear, Ebola, everything, the market's fallen. We have a signal to say green, a shakeout. We've seen multiple shakeouts, and there's more to come. So does it work in spot forex and currencies? Yes, it does. Of course, it does. This is the confusing bit. People say, "Well, it can't work for forex." It does. I happen to be using TradingView for forex and for the currency futures, but you can use other products. We support other products, but I would certainly recommend that TradingView seems to be the way to go at the moment, only because a lot of people are using it on their smart tablets. Like I'm using it on my iPhone 17 and I'm using it on my Samsung and my Pixel. So why do I have three phones? Yeah, that's a great comment. I did get an email about that earlier. And I said, well, wherever I go, if I'm traveling, there are different places you can get 5G connection, you can get really good Wi-Fi, but if you've got three phones, it shouldn't go wrong, right? And it doesn't. It works. So this was a great example, and I'm going to use Mark Carney here as an example because he's now the president of Canada, and he's in the news right now. And he came out when he was, I've never met him, but I followed him. And he came out and said, interest rate warning. This was 2014. Remember, this is an old PowerPoint. I'm not going to make any excuses for that because it just goes to show you the principles don't change. Doesn't matter. I could go back to 2001. They don't change. So he's come out, interest rate warning. So this happens all the time. Bank of England looks to set call time on era of record low interest rates. Oh, okay, that's the Guardian, major newspaper. 13th of June, Friday the 13th. Why would you release news like that on Friday the 13th? Well, you would, because that's what happened. And this is the old software. This is not the new version. It's much improved. But it goes to show you, it's the same indicator. It's called a potential buying climax. Look at the volume on it. Look at what happened. It's complete rubbish. And this is what goes on all the time. And it's done deliberately, but so the herd don't understand what's going on. The volume is enormous. It's starting to break out of an old top. And they all think, oh, it's a breakout because their stochastic says it. Their MACD, their moving average. Oh, everyone I've been taught tells me this. It doesn't lie. Okay? And then you get no demand. No demand after that. I've said it on YouTube, so I don't want to keep repeating myself. This is on YouTube. It's how it works. It has to be how it works. So you get the selling, and then the market goes sideways and it goes up on next to no volume, which we call no demand. We can trigger it. Does it work in Forex? Yep. This was in with active trades. We did that. And you can see here in the futures contract on the left, it moved, and it did it in the spot. Okay, now, the question I've always been asked is, there's no volume in spot Forex, Gavin. It doesn't work. You're all wrong. I'm sorry, you're wrong. You do get tick volume, and I've proven that on that chart. But I did it years ago, and I'll say it again. It does work. It does work. And in the course I'm doing with Tiru, you'll see it. I'll show you. We'll work with Trade Nation, which are a great brokerage firm, and we'll show tick volume. And it's fine. It works. It absolutely works. And the reason is activity volume. That's all I call it. I don't like the word tick because that makes it sound like, oh, that can't work. It does work. And if you don't believe it, go and look at the channel. And the chart never lies. And this is something that I did at the London Banking Hall. And I said, well, look, if you trust in your chart reading skills, which is what we're teaching at the course, it's such an important part of trading, because you don't have to rely on all the news, conjecture, your broker ringing you up saying, you should buy this, you should do that. No, chart doesn't lie. It's data. And if you read it properly, you'll be fine. I mean, this is a great example. I mean, it's in my book. You know, BP shares plunge. This was back in 2010. I was in Boston with my wife, Laura, who's next to me right now. And we were at MIT, the Massachusetts Institute of Technology in Boston. And I was doing a presentation to the Boston Traders Group. And the night before, Tom had told me to buy BP shares. And that's what happened. I bought because we both had a joint account. And I bought on the low. And actually, if I go back in history, it was a 10-year low. But look at the volume. We can't cap the well. We're done. We're finished. We can't cap the well. We're going bust. Colonel Gaddafi's buying us. It didn't happen. BP doubled in value. And this is the other one, which I loved, was gold going to Goldman raises gold price forecasts, right? And so you've got this, okay. Gold's going up. Just be careful now. It's going up right now. I'm not, please, as I film this on the 23rd of September, 2025, I'm not telling anyone to sell gold at all until I see the indicator. You've got to see it. You have to get the alert. I haven't got it. So that's not the message. This is what happened in 2011, and it's just an example of what to look for. Okay, that's what happened. Look at the volume. And just as all the big banks are saying everyone's buying, look, please listen. That is selling. Now, I haven't seen it yet. I haven't seen it yet. But it doesn't mean it's not coming, because it happened then. And history does repeat itself, unfortunately. And that's what happened. It's sellers coming in. So if gold is a safe haven, we have to wait. And the good thing about the new software that we've got in TradingView is it sends me an alert. As soon as it breaks what I call a number, a trigger number, it sells off, and then you're alerted. And it's in multiple time frames, you see. That's the one thing I must stress. I keep getting emails from people saying, which is the best time frame to use? And the answer to the question is, are you an investor? Are you a scalper? Are you a swing trader? How do you put yourself into a category? And when I do eventually talk to people, and I don't talk to too many because I'm very busy, but when I do, I ask them what they don't know. I said, so you haven't got a trading plan then? And they're like, what do you mean a trading? I don't have a trading plan. I said, if you don't have a trading plan, then remember these things I'm about to tell you. Fail to plan, plan to fail. And look, my dog agrees with me. Seriously. If you have a trading plan, which we can help you with, and I will personally send you my own, or my wife will send you a trading plan, you can see it. It's not difficult to do, but it gives you a structure. And I've mentioned this before. I'm teaching a couple of pilots, and I do one-to-one mentorship courses where I help people to structure their trading. And the first part we start with is, okay, show me your trading plan. None of them have a trading plan. Amazing. Yeah, including my dog. I've got 2 spaniels, by the way, and they're highly trained. Yeah, but they're not trained to trade yet, but I'm working on it. But yeah, it is important. You have to have it. So when I look at, a chart, the first thing I want to look at, and this is what I teach straight away, is we want to look at something, I call it a Yao Ming bar, but that you can call it what you want. It's a very high volume bar. The reason I love Yao Ming, he was a basketball player, and he traded, I think he was in the Astros. He was very, very tall. I think he was 7'6". Yeah, and yeah, there he is. There you go. That's Yao Ming. He was, I say he's currently, this was old, this particular, and I make no apologies for that, great player, absolutely brilliant. And what happens with these things? I remember going to Australia, and I've been to Australia several times, and I love the Gold Coast. Okay, and I spent a lot of time in Sydney, obviously, and various places in Australia. Lovely people, lovely food, lovely, everything's good. You can't beat Australia in my view. But I went and met a guy called Nick Raj, and I mention him because he's a really good educational expert, in my opinion. And I went down to Queensland, and we spent time fishing and having a great time. But ultimately, it's interesting when I was looking at this, and I was thinking, oh, hold on a second. This reminded me of an event I did while I was there, and it says Qantas nosedives on profit warning. Now, I was like, oh, okay, that's not good. So let's just go back and remind myself. Buying when news is bad, Qantas. I mean, look at this picture. He doesn't look very happy, does he? So now we must learn. Okay. And it was very interesting, actually, because that happened. And then we had up here these red indicators. And then you had the buying because it's nosedived on a profit warning. Okay. But look at the volume. That's what happened. Up it goes. Has to. It's an accumulation area. But it always doesn't. Now you get more news on other things, right? This happens to be Boeing. And I'm just going to go through it quickly because I don't want to keep you all. But a selling potential climax, Boeing. And you've got all this negative news. So at the point that Qantas was saying, oh, we're in serious trouble, the buyers stepped in, which they would do. Now here, this is Boeing on the weekly chart, okay? Now the news is pretty bad. And then you got a test. Now, when you get a test in any environment where you've got massive volume in the background, you've got to understand that the news has got to be bad. And it was on Boeing years ago. And it just continued to go. And then suddenly, this is exactly what happened with Qantas. And I was talking to I did a big seminar for our Australian customers. And it's great news for Qantas, February 2016. Brilliant news. I was right. It went up. And then suddenly, look at the volume coming in. And I thought to myself, hold on a second. Everyone's trying to buy Qantas. So I did a video. And I make no apologies for it. It was spot on. And all of a sudden, I saw this massive volume spike on this bar here. Now, this is the old version of the software. Please note, we've completely changed. We're much more with TradingView, but we got these indicators in there. But it's there. Now, you look at it, and then you've got no demand into the same area as the end of a rising market. And look what happened. So, and I can show multiple examples of this. But this is the herd versus the smart money. Now, because you spent your time here today, and many of you on YouTube have as well, it means to me that you're serious about trading and investing. You wouldn't spend your time on a Tuesday listening unless you thought there was some truth in this. But this is how it works. And this is what Tom taught me. And this is my mission, is to say, okay, look, what happens is the market starts to break out. And then here you get I've nailed it. Doesn't matter what time frame. It can be different time frames. But when it starts to go down here into the bottom, you get the capitulation area and you get the depression. And I've talked to people who've actually suffered from very bad thoughts because they're going, I've got it all wrong. But you don't need to do that. You just need a plan. And that's very, very important. And then here's the key points. And they're very important. And that's part of the structure that we're putting together in our course. Always look at the big picture. Use 500 plus bars of information in more than one time frame. Really important. Look for the Yao Ming bars. I've shown you that. That's bars with massive volume. Identify the trend and mark key support and resistance levels. You might say, trend, what time frame? Multiple time frames. Multiple. You don't use one. You don't look two. You don't look three. I actually look at 5. And that's in my trading plan. And they're and that's for intraday trading. This is not for investment trading. I'd use much bigger timeframes. That's important. Identify the trend, which you do, and mark the key support and resistance levels. That's important too. Look for a change in behavior. That's David Weiss. A great book. Please go and get it. It's called Trades About to Happen. Write that down. It will help you enormously. It helped me. Trades About to Happen by the late, he's passed away now, David, D-A-V-I-D, Weiss, W-E-I-S. Brilliant book. Next, you look for accumulation and distribution. And then you define what the smart money are doing. That's pretty much what I've been doing on all my YouTube videos. And if you haven't watched them, that's fine. If you have, then you'll understand where I'm coming from. And then you identify what I call, and I've written about this in my book, trigger numbers. And this is a very important part of what's going to be part of the course. It's identifying phases. Very much important. It's vital. Vital. It to me was the groundbreaking moment. David and Tom showed me this. They said, look, the market moves in accumulation, distribution phases. And I said, well, surely it just suddenly turns around and it reverses. And no, it doesn't. And they taught me. They said, you've got to be patient and wait for the breakout areas. And that's exactly what we've developed in TradingView. I'm delighted to say that, there's a lot of TradingView clients out there that have got the program, and they're using it because they're getting alerts. So when it does do this, and it does do this breakout, like we saw here, okay, this is just an example. But what is happening here is phase A, B, C, D. That's what we've programmed in. It's groundbreaking. And it has to be, because I needed it. And I know as clients wanted this. So the first thing you want to look for, and that's why I work closely with Tiru Nagapan at Master of the Markets. The first thing you want to identify is if a trend is going down, 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 you want to identify when it's stopping. Number 2, you want to build a cause to go back up. Now, it's the opposite on the top, end of a rising market, which I've shown you. And then you've got something called testing, but that's interesting, that one, because I got a great email from a guy. He said, what's the opposite of testing then? If it's in a downtrend, as it's called no demand. And he went, that's the aha moment. And I went, really? I said, have I not mentioned that on all my webinars? And he said, well, maybe I didn't listen. I said, but a test happens as the market's trying to rise, and it's testing for supply, and no demand, which is as it's falling, is trying to go up on low volume into the area where the supply is. I think I've demonstrated that. And if I haven't, please email me and tell me and say you didn't explain it. But I think I have. And then you define a new trend. Now, defining a new trend, great example. Which time frame? 1 minute, 3 minute, 5 minute? Of course, that's why we developed the software. You can look at multiple time frames, and so you should. Now, if you're a let's say you're a scalper. You say, oh, Gavin, I don't want to be in the market too long. Then you'd look at a 1 minute, 3 minute, maybe a 5 minute. Fine. Gavin, I'm an investor. Okay. Then you'd probably be looking at a 1 hour, 4 hour, maybe slightly longer time frames, like I've done in video. In the video, go and look at it. It's gone up. So I think this is a very important part of learning, is for you as an individual, is defining who you are. What do I want to learn? What do I want to become? An investor, a scalper, a swing trader, or, I mean, there's plenty of things you can put ticks in boxes, but I don't like to do that. Every one of you are different. Every one of you. And some of you I've talked to, and some of you I've advised, and some of you are, you know, the guys that are the pilots, they're here on YouTube. The bottom line is, the way I look at this, I think it will help, is the trade guider system is very straightforward. We're looking at markups, accumulation zones, distribution zones, and markdowns. Now, they happen all the time in different time frames. So if you said, oh, give me a 1 minute chart, I could. Give me a 5 minute chart, I could. Give me a daily, give me a weekly. I've done it all on YouTube, so I don't have to really go back through that. The basics are this. And this is very important. And I'm going to finish off on this. And then if you want to talk to me, we're on live chat. Right? My wife, Laura, is next to me. Do you want to say hello to everyone?
Hello, everyone.
Hello, everyone. She's American. We're here. The bottom line is this. What did Wyckoff do? He studied market action based on volume price. And that's where it started. He determined where risk and reward were optimal. That's the key for me. He studied the psychology of trading and why smart money buy and sell at a certain time, hence the reason for my third book. He explained the shifts between the weak holders, the people that panic, to the strong holders, commonly known as what I call them smart money. He introduced the term the composite operator, or the consensus of opinion of the smart money. Trading in the shadow of the smart money deals with exactly this concept, because it's exactly what Tom taught me, because he was the smart money. He was part of it. So, who are the market participants? Well, if you use Mother Nature, and I hate to do this, but I did this once in Malaysia. I was told I can never use that screen on the left. They said, you can't show the herd. I said, it's just an example, but actually, in certain religions, you can't do it. And I learned, but anyway, it is there. So there's the herd, and there's a wolf. I've got 2 dogs, and they're highly trained. Now, the interesting part about those 2 dogs is, you know, you've got the herd that are all going in the same direction. They always seem to do that. And the wolf seems to just wait and pick off one thing. Now, I'm not being negative. I'm saying, bottom line, I'm here to help you. And so is Laura. And so is the team. We know how the markets work. And having done a lot of events, I know that. Now, what I'm going to do, let me just finish off, and then I'm going to put the open mic session on, okay? So anyone that wants to open their mics, just let me know. And what I'll do, I'm going to unmute. Yeah. I think me as a police officer is not going to work, but that's fine. So anyone that wants to ask a question or anything, fine. I'm here. We're not going anywhere. Okay, so I'm going to basically unmute everyone that's on Zoom, and then on YouTube, I can't unmute you. Sorry, I can't do that. But I'm happy to answer any questions at all. And then what we'll do, I'm going to put back up. Yeah. Yeah, that's fine. Yeah, I can see you on YouTube. And what I'm going to do, yeah, David, I've got your email. I'll come straight back to you. Just give me a few minutes because I'm going to just put this on. Okay. All right. Yeah. How are you doing? Okay, everyone. I'm just about to put a video on. Let me know if you can all see it. I can see a lot of people that are joined in. Okay, I'm just about to put a screenshot on. Yeah, can you hear me? I can hear someone talking, but that's... How you doing? Okay, I'm going to put the screen on now, and just let me know you can all see it. Okay. Perfect. Okay, good. Thank you. Yeah.
Okay. Ano che bude, tam nie ma wody, tu nie ma wody. Super, nie. Ja wiem, jak to było. No i ja
Right. What are you talking about? Okay, good. Excellent. Okay, can you all tell me when you can see my screen? You should be able to see this now.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low, depressed prices. And the best way to do that is to create bad news, put out rumors, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, there was complete fabrication. Then the directors would look at each other and sort of shrug their shoulders. But the audience heard that and they think, aye, they've got something going on. They're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all because we bought in the lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing. If the opportunity is there, a professional trader will take it.
Brilliant. And again, just to finish off here, and we're here on live chat. If you want to talk to us, I hope you've enjoyed the webinar. Ultimately, we've covered quite a lot there. I must admit, I've overrun a little bit, but the methodology is very clearly explained here. And what when I say a methodology, that's an interesting one because people say, well, what's a methodology? Well, it's basically a way of analyzing a chart. And when I talk about price charts, it's data. Now, there's a lot of stories at the moment about AI and Nvidia and that, which I've invested in. I bought Nvidia months ago. I've done really well. But ultimately, you talk about what is a chart. Well, actually, it's data. That's really what it is. And it's activity. So I'll leave you with these final thoughts. And then if you are interested in coming on the course that we're doing, then yeah, get in touch. I'll happily have a chat. But the bottom line is this. Number one, the markets move on universal laws. They always have done. Supply and demand, cause and effect, effort versus result, which are the three main charting examples. And then in my third book, I've talked about it. If in order to make money, you've got to believe in something called law of attraction, which is where you're actually believing that what you're doing is correct. And that is quite an easy skill to perform because you say, well, okay, I'll look at my results. Then the other thing is you've got to have a trading plan. You've got to have something. Okay. Steve Jobs, if you listen to the late Steve Jobs, he talks about connecting the dots. I've talked about it in my book. And he's right. everything he said in his final words is correct. You've got to connect the dots. And sometimes you can't connect them until you look backwards. And then you go, oh, well, that's why that happened. That's why that happened. That's why that happened. You don't know. But what I do know, in my experience anyway, is when you do connect the dots and you look forward, you get it right. And it's a wonderful experience because then you say, okay, I understand that. And I've got 3 kids and, you know, they're different ages, you know, 15, 16, 27. When I talked to them, I said, you've got to connect the dots. they look at me like, oh, my dad's mad. But actually, it's very important. And what I want to show you is this man here, Tom Williams, taught me pretty much everything that I knew about trading and investing because I didn't know anything about it, which means at the same time, you can learn all of this. Now, I've written 3 books. I never thought I'd be an author because I'm a former policeman. But I do know that when I wake up in the morning, I feel massive gratitude for what I've learned. And it's so important to me because at the end of the day, I'm talking to a lot of people on YouTube and you know, on Zoom. We've got loads of people on YouTube. We got, what, 15,000 followers. They listen and then they email me and they say, oh, okay, I didn't know that. So here's my advice to you, to everyone listening. Number 1, believe in yourself. That's all you've got. Believe in your ability. Number 2, get education. Learn. Because that's how I did it. I didn't have these skills. I went and did a presentation at my child's school. I didn't realise what I knew until I talked to the students and I went, did I really know all this stuff? Yeah, you do. Number 3, never get depressed. Never get negative. Very difficult to say because a lot of people do because it's human emotion. But there's one thing that I learned. I think it's the most important one. It's from a guy called Bear Grylls, who used to be an SAS soldier. And his motto, and he lives in an island off Wales in the United Kingdom, it's never give up. That's all he said, never give up. Now, isn't that easy to say? It's a wonderful thing to say. And then you go, okay, never give up. But then if you're feeling like rubbish and you've just lost 50 grand, which I haven't done, by the way, but if you did, you'd feel pretty rubbish. So ultimately, the most important thing I take out of this seminar, and it's been a great one, is never give up, be positive, and know that you become what you think. Now think about that. That's a really important statement, and it's in my book. There's Wallace Wattles that wrote about it. Rhonda Byrne in The Secret wrote about it. And Dr. Bruce Lipton wrote about it. These are experts in their field. They're not stupid. They know. So if you're going through any turmoil or a tough time, and I know there's people on this YouTube channel that struggle with certain things, please don't give up. But most importantly, you need to look at your plan. And if you haven't got one, then it's down to you. It's not down to me. It's not down to anyone. You haven't got a plan, then you can't put something in writing. You probably should. It helped me, save my life, actually. And as I've written in my book, I had 2 near-death experiences, and I'm going to share one of them with you. When I was a police officer, I fell out of a police van and got run over and nearly died. Now, that's quite serious, because I wouldn't have met my wife. I wouldn't have had 3 kids now. I wouldn't have had any of that. But the bottom line is, I realised as soon as I was in the hospital, when I woke up, I was here, and I'm still here, thank God. But it was a very surreal experience. But at the same time, you don't know. You don't know. And something happens, and you say, why did that happen? It's a bit like trading. And I know this sounds odd, but it is true. When you're taking a trade, all you're doing is putting your money at risk. And you're doing it because you want to make more money. Well, there's nothing wrong with that. I don't think that's an unfair comment. But what happens is, once you're in that trade, your emotions start to take over. Now, if you've made the right choice and the market goes in your favor, say you're short or long, which I've talked about today, and it starts to work for you, you're going to be elated. You can't help it. It's emotion. When it goes against you, though, you're going to get angry. I don't care what anyone tells me, you're going to get angry. You're going to say, that's not right. That's not fair. That shouldn't happen. And I'm going to tell you this. What I learned is risk management. It's the biggest thing that I've ever taught myself. In that Tom Williams said to me, you're never going to be 100% right. And I said, well, no, I need to be, if I'm trading, I need to be right. Otherwise, I'm going to lose money. He said, it's never going to happen. That was the biggest lesson I learned. He said, but what you can do, you can mitigate your risk and add to your profits. That's what we call scaling in, which is what I do. And it's the best thing I ever did. And to all of you, I wish you well, but that's it. That is the most important thing to learn. Don't ever beat yourself up about a loss, because it's going to happen to every one of us, which is annoying. And I can't solve that. I'd love to. But what I can say, without any shadow of a doubt, is you can scale into a winning trade. And if it's going up 10 pips or 20 pips or 10 points, whatever, you can move your stop to break even and then start chasing it. And that's what I teach. And it works. But you've got to get the timing right. And that's what the new software does. Any questions from all of you? And I've got Tyrrell on the other line here. Any questions at all?
Yes, Kevin, I've got a question.
Yeah, go ahead. Yeah. Is that Hassan?
Yeah. Yes, Hassan. We talked last week, remember?
Yes, we did. Yeah.
For about more than an hour, I think.
Yep. Absolutely.
So Kevin, basically I've got VSA Lite, but it's obviously I'm looking at your chart as well. Which one are you using? Are you using the Pro one or the Lite one? Because I can't see the same features in my one. Because obviously it's my first time. I've never used it before, and I haven't took a trade yet on by using the Lite one. So I just want to ask you, which one do you think is the best one? Because I've learned the work of method properly. I've done. If I use the normal volumes and look at the candles myself, I can take trades that way. But with the VSLI, it's a bit, difficult. I think it's because it's my first time and I'm not getting a hand on it. I don't know. I'm a bit confused.
Hassan, have you looked at the video, which is on youtube.com Trade Guider, and it explains the differences between the Lite and the Elite version? because there are differences. Okay, they do different things, but it's all on the video, and it's not a long video. I think it's about 45 minutes, and that. I could spend hours with you showing you, but yeah, I don't need to. It's on the video. So if you, I mean, just do it now. Go to youtube.com.
Yeah, are you talking about the trade guide?
Yeah, you go to no. You got to go to youtube.com
Mm-hmm.
and then /trade guider, and
Yep.
tell me when you're there.
Just bear with me 1 second.
Okay.
Let me.
And by the way, for all of you listening in,
Yeah, I'm on the channel.
yeah, you'll find it. But for all of you listening in, that's a great question from Hassan. He's saying, well, okay, I've got the light version. What's the difference between the elite version? Well, there is a really detailed and incredibly detailed video which explains it. Now, obviously you can appreciate from my perspective, I can't spend hours explaining it, so we've done a video, and it works. I mean, we've got loads of views of it. So if you can you go to the videos link?
Yeah, I'm on it.
Okay, and there's that thing there that explains. If you scroll down a bit, it says the differences between the light and the elite, and then there's another one that explains how you set up the software. It's all
Okay,
there.
you just bear with me. I'm just trying to look for it.
Yep. No, you'll find it. No, don't rush. Don't rush. I mean, this is really good because we're broadcasting this to thousands of people, and it's really good for me because then people go, "Oh, I didn't know you had that," and then it's great. But yeah, you need to find it, and I need.
Yeah, I just found a video. It says this is a Wyckoff VSA Pro V1 with a short. No, that's a short setup thingy. 1 sec. Yeah, I'm just. You know what? I'm gonna look for it, and hopefully, if I can't find it or if I've got a problem, I'm gonna message you then. And
I'll send you. I'll send you the link. But can you show your screen? Because it would be.
no, I'm looking. I'm looking at my what's it called? Just 1 second. Let me share it. I can't share it from here. 1 second. Let me try. I think you turned.
I can email it out to everyone.
So yeah, just please if you can do that one. Yeah.
Yeah, there's two videos. One video explains all of it. The basics. The second video explains the difference between what you've got, which is the light, which is and then it explains the elite and what that does, which I've covered. But I really value the fact that you've asked the question because I'll tell you what it does for me. You go, okay, if you can't find it, then other people can't find it. I mean, let me try and share my screen. I just want to make sure I'm not being stupid because my wife's going, "You are stupid." She's like, "You're stupid." I said, "I don't think I am. I'm pretty certain I've got this right." But anyway, okay, all right. So what we're going to do? I've got so many emails coming in right now. All right. So what we're going to do is we're going to put up.
Yeah, I just saw one. I think it's it's a it was 4 months ago. It says trade to win subscription levels. Yeah, I just got it.
Yep, it's there. I know it's there.
Yeah, I just got it.
It would be 4 months ago. Yeah.
And the other video you were talking about like how to set it up. Was it before that or after that?
No, that's exactly correct. Nothing's changed. So, can you see my screen?
Yeah, I can. Yeah, I can see your screen. Yeah.
Okay. So, I mean, this is good. This is good for everyone. Brilliant. Okay, good.
Now, to be honest with you, I didn't know about this in the start. Otherwise, I would have got the either pro or elite version. So, because it was my first, obviously first time, and I was like, I'll go with the basics. But there wasn't that much price difference either.
Yeah, it's really well explained on the channel. So let me just show everyone. And can everyone see my screen? So we're broadcasting live on YouTube. So what we're doing, okay. So there are multiple videos here. I mean, you can go to the videos tabs, and a great question here. I've got to be honest, it's a really good moment because you go, okay, you got a good question. There is a lot of stuff in here, and you know, this one here. People say, what's the difference between light and the elite version, which I'm using? Okay, well, that video there, if you click on it, okay, and you can click. I mean, I can click on it. It works.
And that's fine. We'll watch it from here.
Yeah.
We'll watch it from here. But the other one is the setup one. So if you can please let us know which one's the how to set it up properly. And because I tried the setting the other day and I don't know like how to do it properly. And if you can let us know which is the other video, as you told earlier that there's another video for the setup as well. So
okay, so let me just check something. Okay, everyone. All right. So if you need to set up the Trade Guide Lite version, which is what you've got, the easiest way to do it is to put in a support ticket. Now, how do you do that? It's simple. By the way, this is all the information you need between the Lite, the Pro, and the Elite. That's easy. That's a no-brainer. If you have registered with TradeGuider.com, which I'm assuming you have, then you log in to your account. Now, how you do that is you use your username and password, and you say, can you send me, and you put what we call a support ticket, which is what most companies use now. You put the ticket in, and it's really simple to put in. You just fill it out and say, hey, I want to set this up. Fine. I'll tell you what you're missing is you're not setting up the script correctly for TradingView, and that's what you've got, right?
yeah, and the other thing, I had a problem the other night. The first night, I couldn't log into the Trade Guider, and I've still got the same problem. You said you're gonna sort it out later on Monday, and I thought you guys must have done it, but it's still the same.
Can you do me a favor? This is good. This is really good. Can you go and just check? Go to www.tradeguider.com and tell me you can log in. Okay.
Yeah, just bear with me. Let me get
That's good.
your.
This is good for everyone because people are going, oh, okay.
Gavin, what was your miss?
Okay, so just go to tradeguider.com and log in to your account.
Hello, can you hear me?
Yeah, I can hear you fine.
Yeah, I said your missus emailed me the other day. If you don't mind me asking, is her name Laura or something?
Yeah,
Laura?
Yeah, but she's here. Yeah.
No, it's fine because I wasn't trying to find the email. You know what I mean? 1 second.
All right. Yeah. So can you confirm that you got this is good? This is really good for everyone actually because it'll show that you've got the email definitely because I can see you have, and B we can see the problem. You know, if there is a problem, I can't see one. So anyway, I don't want to keep the recording going. So what I'm going to do, I'll call you back. Is there any other questions from anyone? Because I will call you straight back and we'll figure it out. But the bottom line is no, everything's working. Yeah. Can you have you logged in? Yeah,
Yeah, I've logged in. I think there's a problem with the server. I've got I've logged in now. So what I'm gonna do to set it up, I'm just gonna put the ticket on, I'm gonna open a ticket, and you can email me later on how to do it properly because I don't want to waste your time here.
No, that's fine. That absolutely fine. And I'm glad you've done this because it's very for us, we can look at it, we can see it on our end, and there is no issues at all. Just for the rest of you, by the way, I will. This will go automatically up on YouTube, so you can see it. I'm just having a quick look at the other comments coming in from YouTube, and I will answer them directly. That's absolutely fine. Yeah, that's fine. All right, Hassan, leave it with us. We'll look at that. And
No worries, mate.
yeah,
Thank you.
do. Okay, you take care, everyone. Lovely talking to you. If we're on live chat now. Any comments? Take care. Cheers. Bye bye.